A very good morning, guys. Today is extremely special as we are recording this 100th episode. 100 trading mornings, 100 data packs, 100 sets of levels graded in public. The next very day, every single time, and it has been difficult for me to get to it. But today we are marking 100th episode, and today is the weekly expiry as well. So where the options board has squeezed into a 100-point box, a 1.12 crore put support at 24,500, a 1.46 crore call resistance at 24,600, max pain sitting exactly in between, and a straddle that costs just 146 rupees. This is the Tanmay. You are listening to episode 100. I'm Tanmay Kurtagoti. Let's go. So before the numbers, guys, 30 seconds from me to you. When this started, the idea was simple. Read the actual exchange data that gets published, take a view, put it on record, and grade it the next morning against the settlement. No hindsight, no deleting bad calls. 100 episode later, that scorecard is the product and it is available on rupeecase.com. And the system behind this podcast, Rupeecase, all cap strategy, sits at 596% net return since inception against the benchmark return of 49%, a CAGR of 47.43%. That gap is not a prediction, it is a process that we have been following for so many years. Thank you for those 100 mornings. Now let's earn the 100th and the first. So Monday, Nifty closed at 24,583, up 13 points. It opened at 24,581, dipped to almost 24,511 in the first hour, and the dip got bought exactly in the zone this podcast marked, 24,550 to 24,500. It then spent the whole day pressed under 24,600, high of 24,620, and could not close above it. The Sensex added 43 points at 78,542. The VIX, or the fear gauge, up 1.4% to 12.33, and the rotation flipped for a second time in two sessions. Friday's wreckage led Titan up 3.1%, Bajaj Finance up 1.9%, Bajaj Finsub up 1.2%, Friday's hero faded. State Bank down 2.2%, TCS down 0.8%, capital market names, realty, private banks all green, PSU banks down 1.7%, defense down 1%. So two flips in 2 days. It's not a trend, guys. That is money squaring itself under a pin. Breath said the same thing, 25 up and 23 down on the Nifty levels. So which brings us to Friday's call. Episode 99 said buy the dip towards 24,550, even 24,500. Stop on close below 24,500. Do not sell the volatility. The dip came at 24,511 and got bought to the point. The stop never came close. The upside trigger at 24,600 never fired. So I'll take a 4 on 5 on episode 99. Full scorecard is available on rupeecase.com. Now the board, because today is what the entire story is all about. So max pain for today's expiry is sitting at 24,600. That is the expected expiry that should happen at the pin, and we closed 16 points below it. On Monday, put writers added 2 crore contracts against just 10 lakh fresh calls. The PCR jumped from 0.73 to 0.85. That's a bit of a bullish. And at 24,500, the puts now stack 1.12 crore and 39 lakh of them added in one day. So 24,500 becomes the biggest support on the board. At 24,600 sits 1.46 lakh of 1.46 crore calls and almost 1.09 crore puts, both armies on the same strike. Above it, 1.09 crore calls at 24,700, 1.18 crore at 24,900, and 1.29 at 25,000. Below the fortress air is until 24,400. The market has drawn a box of around 24,500 to 24,600 and it expires today. Now the volatility masterclass I promised, because this is the special segment for episode 100, and it has three clocks in it. Remember it. Clock 1, implied volatility. On Friday, the weekly option priced tomorrow at under 10%, while the back week sat at almost 11%. The market called this expiry boring. Episode 99 said, do not join that trade, do not sell volatility. On Monday, front week IV exploded 22% in one session from 10 to 12.2. The curve inverted. Today, now it costs more than the next month. The boring expiry consensus is dead, and whoever sold volatility at Friday prices finance that lessons. Clock 2, forward volatility. Strip the wicks apart, and the market is pricing roughly 10.65% between expiry 1 and expiry 2, 11% between the next and the monthly. So the inversion is only in the front. Translation: the market fears today, especially weekly expiry, not the August monthly expiries. And the third one, write this one down, guys, the theta clock. The straddle closed around 146, expected to open around 120 to 25. That is the overnight decay taken out of the bell. Through the day, expect another 30 to 40 points to melt out, and at by 3:15, the straddle should be trading somewhere around 80 bucks that we saw last week. If we stay inside the box, and then comes the last 15 minutes of cash closing, the closing auction window, the place where these last 2 weeks taught us the wildness now lives. That is there where the volatility can come back from the dead in one print. So the map of the day in one line: decay from 9:15 to 3:15, danger from 3:15 to 3:30, and who is holding what into this. I read the pros or proprietary traders, then the FIs, and then the retail crowd. The proprietary traders are long 2.14 lakh calls and 0.72 lakh puts, both sides long volatility. They trimmed a little on Monday. That is them booking the IV spike, not leaving the trade. The FIs pushed their put book to 4.3 lakh contracts, the week's high. Short 2 lakh calls, short 1.5 lakh index futures against a 6.2 lakh long stock futures. Remember this. So they are long the futures, stock futures, and short on the index. So 4 is to 1 hedged long. And in cash, the role reversed for the week. FI has bought 1975 crore on Monday, their biggest buy in weeks, plus 3925 crore into index options. The DIS sold 1290 crore in cash, their first sell after absorbing 7000 crore plus all week. The FIs are buying India and buying the insurance on it. On the same day, the crowd still short 5.5 lakh puts naked. They covered 14,000 contracts out of 5.67 lakh as on yesterday into the expiry morning. And quick word on the global markets. GIFT Nifty is trading at 24,605 as I record, basically flat, a quiet open. The US closed soft, Nasdaq down 0.3%. Asia is mixed and calm. The two live wires are elsewhere. Brent is at 87.90, up almost 5% in two sessions. And gold printed a fresh all-time record this morning at $44.26. The rupee is soft at 95.30. Oil is at 88, is the wild card under this market, and keep a watch on it, because if oil rallies and we touch $90, we could see 24,500 getting broken as well. So here is the plan for episode 100, guys, and the bias has not changed. Buy on dips with a close below 24,500 as the stop and exit for everything. But today is expiry, so execution matters more than the direction. Naked longs should bleed today morning by 3:15, somewhat that we didn't see last week. Today the tool is the call spread, guys, not the naked option. Buy the 24,500 call and sell the 24,650 against it, or buy the 24,550 and sell the 24,700 call against it. The ratio can be 1 by 2 or 2 by 3. You're buying the strikes, the resistance, and selling the strikes, the uh, call writers own it. So their decay pays for your position all day. If you pin at 24,600, the spread finishes flat and we get the max out of it, while the straddle buyers bleed. If the box breaks up through 24,600 on closing basis, the 1.46 crore trapped calls cover and 24,700 comes first. Your spread max out. One discipline point, guys. The extra short leg is a bet on the resistance holding. If 24,700 breaks and holds, cut the extra leg without argument and be flat of everything before 3:15, because the last 15 minutes belong to the auction and we don't want to bet on it. And rule number 1, the last 100th episode stands: do not trade the indicative print. Have a great expiry, guys. One box, one support at 24,500, one super double resistance at 24,600, one theta clock running till 3.315. Buy the dips, spread the calls, respect the stop, leave the auction alone. This was the Tanmaj, episode 100. If the podcast has ever paid you a single good trade, today is the trade day to share it with one trader friend who needs it right now. Subscribe on Apple Podcasts, Spotify, and Amazon Music, guys, and listen it live and first on rupeecase.com, where it streams first. Give it a rating and review and tell what the next 100 should look like. See you all tomorrow again, once again on episode 101.